interviewing the leading private equity executives and unlocking the secrets of success. Welcome to the Private Equity Podcast with Alex Rawlings.
Hello, everybody, and welcome back to the Private Equity Podcast. Joining us today is Kevin Flick, an experienced private equity-backed and also public company chief financial officer. Welcome, and thank you very much for sharing your insights today, Kevin.
Oh, thank you for having me. It's a real pleasure and honor to be a part of this podcast.
So, Kevin, as tradition on the podcast, if you could give us a 60 to 90-second breakdown of you, please.
Sure. First of all, the professionals at Ross Selection are some of the best professionals in the industry, as evidenced by their log of all the podcasts they create. It's a testament to that. They've been very helpful. I've gone through most of them. I hope this podcast is equally as helpful. To answer your question, an introduction would be, I'm a transformational CFO empowered by analytics, automation, and the power of teams. I was a former multi-sport athlete and reached the very pinnacle of baseball. And so I believe in team and teamwork. That famous quote comes to mind that's applicable in this situation. In union, there's strength. And I really believe in that. For the past 15 years, I've been engaged as a finance leader to grow, to acquire, and optimize for private equity-backed companies. It's been a real honor building those companies, and those companies have been across 3 different industries and 3 different continents. And so those companies included also, one corporate turnaround, a startup, and dual $2 billion plus growth companies. So all shapes and sizes. What I did to create value at these companies was over the 15-year period across 4 companies, of course, alongside teams and very important CEOs and boards, I was able to raise $1 billion to fund these companies. And so, at that point, I was able to build a scalable ERP system to deliver superior financial results and analytics. I implemented strong technical accounting and reporting standards like GAAP and SOX, IFRS internationally, and of course the SEC. And then I automated many back office functions. And so with that said, with that platform in place, you create this analytics focused finance operation that empowers growth. And then of course, along the way, you purge the inefficiencies of the organization. And so, but back to the teams, cultivating teams, cultivating investors, that's a key focus of in my bailiwick. And then to wrap up on that point, at 3 of the 4 companies, I led 3 IPOs on NASDAQ, the New York Stock Exchange, and the TSX. So with well-crafted teams amalgamated, we created $6 billion in value across 4 companies, and they're all private equity backed. For the first 7 years of my existence and professional career, I was a finance professional at Goldman Sachs, at Ernst & Young as well, and then in Hicks Muse Private Equity as an investment analyst. I served in many capacities that offered really a robust insights to the CEOs that I work with today. And so I was a financial analyst in a former life. I was a board member. I was an accounting due diligence advisor. I was an investment analyst. So across the full gamut of the transaction process, but in total had worked on a total of 26 deals across 9 industries and 30 billion in aggregate value. The last thing I want to wrap up as far as about me is that I really pride myself in having a tremendous empathy for others, with much humility. I understand so many different folks and walks of life. I grew up poor, and so exposed to that element, and then dealing with winning financial services professionals to a successful mad scientist, geologist, CEO that I dealt with. It was just a true pleasure. And then to the narcissist private company owner, I've dealt with those too. They're very inspiring along the way. And then of course, all the investors that I dealt with in raising $1 billion. I know many audiences, and that certainly enables my empathy towards others. When you understand audiences, you're able to secure trust and respect from many different interactions and sooner. And so this optimizes my consistent performance.
I appreciate that introduction, and thank you very much for the kind words on role selection. And I'm glad that you've enjoyed the podcast so far.
Absolutely.
So as is our customary, our second question: what's one mistake do you see private equity firms or their portfolio companies making, and what actions would you take to correct them?
Yeah, so it's a very good question. Having served as a finance leader for private equity-backed companies, principal investor at Goldman Sachs, and private equity investment analyst, I consider my perspective fair and balanced on both sides of the fence. You have in one corner, you have this very intimidating, financially sophisticated private equity professional. And then, in the other corner, you have this anxiety-filled company employee. The recent change in ownership has left them having feelings of a rudderless future, if you will. And so, for both parties to work and drive that optimal business win, I believe there's two characteristics that are required. It's trust and respect. And, remarkably, at the onset of the marriage between the two parties, between PE and the portfolio company, it's trust and respect can be lost. And how is that lost? Well, it's lost from PE's. They come in and they have this bold vision, and it's right on point. Like, they have some of the greatest strategies and ideas for companies known to man. However, many times it's not well communicated down to the employees. And so, and then the respect part is lost because often they're very good in their operational talents and coming into an organization, but they'll slash costs left and right, without consideration or input from key employees. And so, a phrase comes to mind in this instance. There's no I in team, but there is I in win. So, to prevent this full cycle repair, I would say, of trust and respect, Ps can do a better job of understanding their new audience, having empathy, again, for humans, and the I in win, inspire these employees to be their very best is key. A few recommendations along that line, and then I'm going to finalize that with two situations where I was the portfolio company analyst inside the PE and implemented two strategies that worked well, that I think would work well for others. But to begin with, telegraph to these employees from a PE standpoint and reiterate your bold vision. Establish that two-way flow of communications, very important. Second would be, God gave you two ears and one mouth for a reason. Listen, at the end of the day, those employees at the beginning of the relationship probably know more about the company than you do. And so you want to make sure to listen and digest that information. PE has some of the best processes in the world by far. They create the most efficient companies in the world. But they also, make sure when you implement those changes and processes and encourage discipline and performance, make time to explain it to the employees. And then that ultimately, how that benefits them and benefits your investment. And then, of course, reward those who outperform. I hear that a lot, and that's been my case in my past. And so, in summary, this creates a mutually beneficial way forward for both parties, and the trust and respect is certainly fortified. Two examples come to mind that I think help in this process and describe this in greater detail. When I was an analyst or investment analyst in private equity overseeing one investment, when you cut cost, and we cut costs just like you do, a side-by-side comparison of EBITDA of before and after, right? And then show their employee ownership applied to that new EBITDA number, right? Which creates many times a significantly improved enterprise value, which in turn ultimately leads to more wealth for them and related to them. It's all about them. It's the story of them. And that inspires people to understand change. The endless flow of information from the portfolio company to the PE, it goes into a black hole many times. It's an abyss. What you're doing with that information is really special. Let them know that. Let them know what you're doing with that information is enriching the lives of them. And ultimately, it enriches the lives of your investment. but that communication and transparency will yield really great returns. And so trust and respect, again, are fortified in those circumstances, and the power of teams is maximized.
Excellent. I think a lot of that comes down to, clear and transparent communication. Really good message there. So you mentioned in your intro, you've worked for both privately owned, public, and obviously private equity backed companies. How would you describe the difference of operating in a business that's under the ownership of private equity in comparison with public and privately owned?
Well, I mean, it's all about accountability. There's really no difference at the end of the day, because you're going to either be accountable to private equity or you're going to be accountable to the public marketplace. And so, yes, private equity can be more demanding because they are owners, but at the end of the day, public in a public domain can be just as onerous, and or not onerous. That's not the right term. Just as demanding as the private equity. And so really, I treated them no differently, and I've made that transition 3 out of 4 times. And so I don't think there's any, you shouldn't have any anxiety from making that process transfer into a public domain. And I saw very little difference. Of course, you're of course reporting to public shareholders and all the regulation that goes along with that, et cetera. But you're preparing for that along the way with private equity and putting their, delivering pristine trial balances, et cetera, to prepare for all that. So it's just communicating to a wider audience. Ultimately, I found that process with me quite successful, because I enjoy putting together the message to the wider shareholder base, because you're trying to attract as many investors as possible as you move from private to public. And I really enjoyed the process of giving them a liquidity event. So.
Perfect. So in particular, I know that you've had an incredible experience with, I think, Canacol Energy, if that's pronounced correctly.
Yeah, that's right.
Taking that business from nothing to over $300 million in revenue. So
right.
I'm not going to let you leave without telling us, what you learned from there. What did you achieve? Give us a bit of insight over that incredible achievement.
That was a fun project over a long period of time. Canacol is Canada as in Cana, and Col as in Colombia. So you had this Canadian geological talent base, and you had this Colombian operational talent base. I was the only American. And so at the end of the day, I was introduced early on, very early stages, to an ex-VP at Occidental Petroleum who manned and operated in Colombia and had access to many opportunities in country. He had determined through years spending time with Oxy that the large competitors like Exxon and Shell and Oxy, Chevron, et cetera, they weren't pursuing any oil and gas opportunities or prospective resources that were worth, less than $500 million. And he felt like, wow, I can create a company in that area or that margin. And so that's essentially how the original mission was. That we attracted talent and people because the turmoil in Venezuela, there's so many gifted and special talented people in Venezuela that move and migrate to Colombia with their oil and gas talents because of the political turmoil there. At the same time, you had Colombian and Canadian talents that simply wanted out of their big companies and were very much interested in entrepreneurial endeavor. And so, with access to ideas and access to people, a quote from a wise person is totally relevant. It's like the net present value of an unfunded project is always 0. And so therein lies my role, meaning that all ideas are worthless unless you can fund them. And so that was my role at the company early on. At the very, very, very beginning, was to attract capital and build a finance function. And so all told, we raised right over $540 million. We executed 4 highly disciplined acquisitions from 50 prospective deals. And then also, again, like I had mentioned before, we capitalized on like my ability to pitch. And so I love putting together pitch decks and spreading the message and spreading talents and spreading asset values and spreading the value of what we have. It's a really, really enjoyable process for me. And so, but I want to talk about one acquisition that made all the difference to Canacol, that catapulted us to where they are, is that in 2012, we began studying the natural gas market in Colombia and in detail, and recognized that there was an extreme, supply demand imbalance. And so for years, Chevron had produced 50% plus of all production of natural gas to supply Colombia. And so their production at that time had just peaked. And so, and it was well known throughout industry that they were not reinvesting in fields, and they were clearly in blowdown mode, where there was no more capital investment, no more future production growth, et cetera. And so, that was therein lies our opportunity: acquire a natural gas platform, right, and grow in the sweet spot, hopefully in Colombia, to backfill this production. No matter what growth in production, growth in demand for natural gas supply on a forward basis, we always had that opportunity to backfill their lost supply every year. And so that's exactly what we did. And this is where it transfers from finance to the real talent in the room, because a famous person once told me, or actually an acclaimed person once told me, always give credit to the wins to others, and assume those losses and find reasons why you can help solve those losses. And so I attribute most of the success of Canacol to our geo talent. It's some of the finest talent in the world. They drilled 30 wells, of which 26 were successful. That's an 87% success rate, okay, versus an industry average of 30 to 40%. So impressive. They're remarkable in their talents, okay? And so that, in essence, led to generating in excess of 300 million in revenues, a 70% EBITDA margin, because once again, we were selling gas and gas molecules in an area that was way undersupplied, so we can charge exorbitant rates for all intents and purposes. And that drove a $2.4 billion enterprise. To sum up Canacol, we built over a 10-year period the largest supplier of natural gas to the $1 trillion economy of Colombia. Through acquisitions and organic growth, we displaced Chevron, and we became the dominant clean energy supplier to 50 plus million or so Colombians and 2.5 million, and they're 2.5 million businesses. So it was a great success story. I'm very proud to be a part of that.
Very impressive, incredibly impressive. And another one of your career highlights, I know, and you mentioned it again in the intro, was the 3 IPOs that you've been involved in.
Right.
Obviously, more poignant now. We had a kind of a quiet period, I think, globally on the whole IPO front, but it definitely seems to be picking back up. What advice would you share to companies that are considering going down the hopefully successful IPO route?
Oh yeah, sure. Well, first of all, in your private company, don't be intimidated by public at all, and that's easy to do. These business development professionals inside the New York Stock Exchange, inside the Toronto Stock Exchange, inside NASDAQ, they're hungry to compete for business, and they want your business, assuming you meet their profile. Okay, and so my best advice would be to IPO early. Don't allow the law of large numbers, which is essentially your top line, which is on an absolute basis. Let's talk top line revenues. They grow faster and faster over time. And naturally over time, the law of large numbers kicks in and your sales growth percentage starts to slow. And when that starts to kick in, it's too late. At the end of the day, I reference a Goldman Sachs study that was done 2 years ago, and they studied like 5,000 IPOs. And the number one driver of IPO outperformance is sales growth, right? So the last recommendation I would have for that is the valuation of it all. Pick the right banker, make sure the shares are going into the right hands. They're going to be partners for a long time. And at the same time, don't be greedy in that valuation process. You want these investors to get filled at the IPO price, and for the stock and the company valuation to run post IPO. That creates enormous headwind, an enormous wind at your back as you operate in the quarters and years ahead.
Perfect. So, and on the talent side, what 3 attributes do you believe make a top performing person?
Okay, well, it's all about consistency. So, attributes that power consistency and enable top performance. So consistency is everything. I believe agility, in this dynamic world we live in, that everything's being thrown at you left and right, finding patterns in chaos matter. Okay. So you have to be extremely agile. The second I would say second attribute for a top performer would be work ethic. Simply, it doesn't matter how hard you work, I will outwork you. Okay. The infinite quest to become like the best version of yourself. So work ethic matters. And then the competitive mindset. I was able to secure it through athletics during my youth. And there's many ways to secure that across the world and the tremendous amount of opportunities it presents. Having that will to win, the passion to compete, to resist complacency, be all that you can be is critical.
Absolutely agree. Definitely on the hard work side. I think that's somewhat kind of downplayed maybe nowadays, but certainly a little bit overlooked, but it's 100%. The harder you work, the more successful, or I can't remember who said it, the harder you work, the luckier you get, was a famous.
Oh, absolutely. For sure. For sure.
So having been in various different areas within, business, as you mentioned, the private, public, and obviously private equity, what is it that you love about the private equity industry, and equally, what is it that you dislike about it?
Sure. Well, they optimize businesses like no other. So they make these companies financially fit, period and paragraph. That ultimately creates greater opportunity in the long run and yields greater returns and more capital for new futures. I'm point blank, impressive, right? They basically remove all inefficiencies in businesses. I believe that, or they try to at least. What I dislike about private equity, well, is their scorecard is fund size. So assets under management. Ultimately the unrelenting quest, to achieve greater and greater capital under management leads to many of their demise. And so meaning that there are more opportunities to create value or for their investors in smaller deals. The larger deals often come with a lot of competition and less opportunity for value extraction. And then also the larger funds, the fund fees become so massive over time that it yields by human nature, managers become complacent, right? And so many a PE have died in questing for fund size.
It's interesting. I've never had that put before. So very, very interesting. So Kevin, what are your influences? What do you read? What do you watch? What do you listen to?
Sure. Well, I'd say my number one influence is my wife. She supported me building 4 companies across 3 continents and 3 different industries. Before that, as a finance professional, my schedules are rigorous. She has this unrelenting commitment to me. So I, in turn, am most influenced by her and her ability to be agile, right? The second one would certainly be my son. He is, it's documented, and it's with many studies that young people today are expected not to achieve as much as their parents. And this is unprecedented in world history, but I strongly want to fight that trend. Like, I teach lessons, through the power of sport, because we're heavy into sports. You can see the cross helmet over my shoulder. And that will hopefully last a generation. I've also learned a lot from him to be a better communicator. The consummate setting is explaining things to an 11-year-old child. It can be very difficult at times. And so he in turn teaches me, much about how to be a better person overall. I would say the next large influencer would be my parents, for sure. They taught me how early on how to work, take risks, to do like your very best in everything you do. Ultimately they came before me. They've endured more, and that's influential for sure. Other than the 4 leaders at the businesses of the companies I've been a part of, and then the bosses in PE and in financial services, I'm influenced by, I really, really enjoy reading and watching, et cetera, about other people's success. And it's incredibly inspirational for me. From the likes of Ronaldo, the soccer player, to the meat packer in West Texas, to the school teacher in Oklahoma, to the lacrosse champ like Paul Rabel, or like an emerging tech titan, or Sebastian Maniscalco, the awesome comedian. I draw strength from understanding how others made it, and then how I may have done it better, or how I may have messed it up. Okay, and then the last, I would say, area of influence in my life would be, the elite special forces, like the British SAS, the US Navy SEALs. In Canada, it's the JTF2. They help me with mental fortitude and passion and the will to win and never give up. And so I'm deeply influenced by their characters.
So Kevin, what advice would you give to your 20-year-old self, please?
Sure. I was lucky to figure this out from my parents as well as others. But read more than everyone else to outpace everyone else. Learning is the key to extraordinary things. And so not just social media, really quality information to make you better as a human. You're capable of many, many things, but put your brain to work. The world is your library, thought, right? And then, the next piece of advice would be, as Michael Jordan asserted, to be great, do what 99% of people aren't doing, right? Do things that others won't do, and simply you'll get ahead by doing those things. Very, very important. Next piece of advice would be take care of your body. You're going to have tremendous stamina over the next 40 plus years working, and you want to be in the tip-top shape so you can handle anything that's thrown at you. Again, add agility, right? Health is wealth theme, right? So, and then I would say a few more pieces of advice would be, you're the sum total of the 5 or so people that you spend the most time with. They keep you out of trouble. They help you prioritize goals and actually champion those goals at times. Make sure they're quality people that you surround yourself with. It's very, very important. Again, be consistent in everything you do, and then treat everyone you meet with respect as if they're like the CEO of a company. I've done this for years, and it really, really matters to people, and speaking of CEOs, it's okay to reach out to those people, or people of significance like that. Ask a lot of questions when you're young, because you're entitled to do so. And, the future, and resist that statement that I said that young people are not going to be able to make it like, the prior generation. That's wrong. That you're not worthy. You will not accept that answer. So hopefully these tips will help you along the way. I've provided my email and phone number at the end if you need to reach out for anything else. But I wish you the best of success.
I really appreciate that, and I completely agree with those. There's a lot of the traits that we look for when we hire into the firm here, and I love the Michael Jordan. Do the things that everyone else isn't prepared to do. And
Right.
I completely agree with you. Are the average of the 5 people you spend the most time with, a famous Jim Rohn quote, and very, very accurate. When we look at people and look at their network and their contacts and who they hang around with, it's really, really true. You've got to keep leveling yourself up and leveling the people around you. So yeah, Kevin, absolutely agree. And I think a lot of that comes into 3 attributes, what I believe make a top performer as well. But yeah, really good advice certainly for our 20-year-old selves.
Sure, absolutely. And recognize too that I still have much to learn about the world around me.
That makes 2 of us. So fantastic. So if anybody's obviously listening to this and wanting to reach out, Kevin, how best do they contact you, please?
Sure. It's very, very easy. My phone number in the US is 214-235-4798. And we could probably flash that on the screen or something at the end. And then kjflick@gmail.com. Very, very simple. Those are that's a personal number and a personal email address.
Perfect. Well, we'll put that in the show notes alongside that as well for anybody to reach out. So, well, thank you very much for joining, Kevin. I really appreciate your insight, really appreciate your energy and clear passion and love for what you do. And I think it's great to see somebody with such a diverse background. I think private equity, we can kind of hate on the public world, but clearly you've kind of been in between that, privately owned private equity and public, and done incredibly well with regards to the growth of the business. So I really appreciate you sharing your insights with us today.
Alex, thanks for everything. I really appreciate it.
And as always, thank you very much for everybody listening. Should you ever need support, either with your private equity professionals in your firm or, of course, portfolio executive hiring, please do reach out to me at Raw Selection. And if you haven't already done so, please do subscribe and you'll be notified of the next podcast, which comes out every 2 weeks. But till the next time, keep smashing it. And thank you very much for listening.
Thank you for listening to the Private Equity Podcast. on www.raw-selection.com.